freaks you out that they did so
That
well with
is
such primitive equipment.
incredible. That is incredible.
All
Hi,
right,
Keith.
Keith, welcome. Hey, just real quick, gentlemen. Keith, is it gonna be kind of the same format like we've done before?
Yes, please.
Just quick, do you want me to do a quick intro?
Yep.
Or will you handle that?
No, I'd like you to do an intro of me, and then I want to, the fellows are going to introduce themselves.
Okay, perfect.
I'm going to pitch it, and Gene we'll go. John and I have worked together a couple times. Gene, I don't know if you and I have worked together on television before. It seems to me we've probably done at least a couple hits over the years.
I bet we have.
I'm sure we have too. So all three of us obviously have the same barber, and we're in good shape there. So is there anything you guys particularly want to hammer on today, or you want to stay away from?
No, nothing wide open for me.
Okay, John?
Don't ask me anything about biotechnology.
Oh my goodness gracious. All right, so let me look here and just
I was planning to just, if you ask about what my trends are, I was planning to talk for about 6 or 7 minutes on my notes.
Okay.
But if you want to do it the other way, just ask me, individual questions. That's fine too.
Okay, well, Gene, what do you have a preference as to how you'd like to do this?
I kind of like it more back and forth. I don't have anything prepared. We can talk about the big themes that we're pursuing. There's kind of 5 big themes.
Yep.
And we talk a lot about the next FANG, where tech leadership is going to come from. So those would be.
Yeah, I told you we really wanted to spend 40 minutes listening to Gene and 5 minutes listening to me.
Yeah, I'm totally with that. I'll listen to Gene all day long. Yeah.
Aw.
Exactly. Yeah, let's do that. Let's have a conversation, because with the three of us, I think we have an opportunity to do something that's good, and we can keep it lively. We can toss it back and forth.
Love it. Yeah.
Very, very casual. I think that's where the real, benefit's going to be to our audience.
Right on.
Pen and paper here real quick.
The stream just went live to the platform. Just wanted to put that out there as a disclaimer. We still have about 4.5 minutes before the presentation begins. So Keith,
Can the audience see us and listen to us right now?
Yes, that's correct.
Hi, everybody.
Hi, Keith.
Hello.
Speaking for the audience.
Exactly. So this is going to be fun. I think we've got a lot of people from around the world joining us today, fellas. So I'm looking forward to a great conversation when we get going here in a few minutes. We'll give everybody a little while to get into their rooms and that kind of thing.
So what's that lapel pin you got there, Keith?
Oh, thank you for asking. So this lapel pin is the U.S. Navy SEAL Foundation, something I've been closely involved with for years. And they're a great charity. They're a 5-star rated charity. But what's really cool about them is it's for the families of the operators who are no longer with us, or the family of the operators in need of help. So the foundation provides tremendous educational resources, summer camps, Santa's medical care, stuff for transition for veterans on their way out, separating, moving on beyond the teams. It's a remarkable organization, and I've been really, really privileged to be play a very, very small role in it over the years.
Cool.
Yeah. These guys are phenomenal, and their families are fantastic as well. So U.S. Navy SEAL Foundation, if anybody's interested. Making some notes here.
Keith, your feed can completely stop there for a few minutes. Did it stop on your side too?
Nope.
Well, hey, Mark.
Yep.
Let me give you my phone number in case my feed dies again.
Okay.
206-851-5958.
Got it.
So if my feed dies, I'll just sign out and come back in.
Sounds great.
How about you guys? But I can't wait to get back out and about again.
Sounds when I think about that, almost feels like a fairy tale.
Doesn't it?
Yeah.
It sure does.
Man, I'm lucky to have my mama with me. I gave her, she got vaccinated and kind of got through the clear, and gave her a hug like I hadn't seen her in 25 years.
Yeah,
So good.
that's where we are on this one. This is it's been tough. My parents are right across town, but still, I mean, it's like you can't. We're a high risk family. I've already lost an aunt and two friends to this thing, so I can't. We just can't.
It's intense.
Charge
Sorry to
out.
hear that.
It's been very real for us.
It's real.
I know it. It's amazing. I remember I flew into Hong Kong in 2012, the day they locked it down for, the avian flu. And I remember the guy standing there with machine guns and the doctors at the airport and thinking to myself, man, this is a new world. And so when we started getting reports out of China this last go round, a year and something ago, I thought to myself, okay, all bets are off. This is going to be nasty.
Jeez.
And
it was true to form, unfortunately.
Yeah, I know it. But, it's like anything. I mean, I guess when we get into this conversation, everybody in the audience, this brings up a really important point. And this is the kind of stuff that Gene and John are known for, is you take information like this and chaos always produces opportunity. So COVID has accelerated innovation 10x. And I'm very excited. We're going to talk about that in a minute.
Love it.
By necessity.
All right, gentlemen. Looks like we're on in about 5 seconds. All right, everyone, welcome back. Money Show is pleased to welcome Keith Fitzgerald. He's founder of One Bar Ahead and principal Fitzgerald Group. He's one of America's most widely read, respected investment experts. It's easy to understand why. His research into safety first profit potential has helped millions of investors around the world build wealth for more than 20 years. Keith, thank you so much for joining us today and your panel. It's all yours.
Thank you very much. Hello, everybody around the world. And thank you, as always, for joining us. Thank you to the folks at Money Show for hosting us. Have we got a discussion for you today? As we were talking about just coming into this presentation, COVID has set the world backwards a number of different ways. It's turned things we knew upside down. It's changed our perception of how we get along, what we do, where we go next, forever. But at the same time, at the very same time, it has dramatically increased the speed at which innovation is taking place. It is going to reshape our world, and I mean that in a positive way, because we are going to get through this. And today, we are going to get through the next roughly 40 minutes together with two of my favorite thinkers when it comes to technology, folks who live, breathe, and eat the next generation of stuff. These are people whose work I read, whose work I respect, and whose work I would encourage you to take a very serious look at if you're not doing so already. With that, Gene and John, would you guys please introduce yourselves, give a little bit of background, and where you're calling in from today?
I'll jump in. Gene Munster, I'm one of the founding partners at Loop. We are a multi-stage investor. We have some private funds, and we have an ETF under the ticker LOUP. And I am from the right dead center of the middle of the country in Minneapolis, Minnesota.
There you go. John? John, can you hear me? I think we lost John. Okay, so John Markman is calling in from Seattle. He's just to my south. John, can you hear me? All right, we're going to go back to John. So, Gene, talk to me about a couple things here. First of all, I think that what's happening now is a global reset. This is not just about the next 3 months, 6 months, 12 months. What's happening right now, particularly when it comes to technology, is a reset in profit potential for the next 10 years. What do you think?
I think it is. And we think about this accelerating digital transformation. It's quite remarkable to think about the last kind of 50, 75 years ago. This pace of innovation has been quickening. We all know that. And I'm going to get to the profitability piece, but I just kind of frame in what's going to happen the next decade is that we've been getting tech more faster to a broader population. Think about the TV that hit 20% market penetration within, call it 25 years. The radio took 17 years. The kind of fast forwarding to the internet, it took 7 years. The tablet, it took 3 years. So this concept of more happening in less amount of time is nothing new. We've been experiencing that for a long time. But the piece I want to really frame in is in the next 10 years, it's not going to feel like 10 years of innovation. It's going to feel like 30 years. And that's because of this compressing. We can't look at what's happened over the past 10 years and just kind of apply that to the next 10 years. We're going to see much more of that happening. And as you said, the pandemic has had an impact in all of that. And specifically, the pandemic has created just across multiple areas. We all know that it's having an impact across multiple areas. But when we think ultimately making wise investments, what matters more is about the profit that these companies can make over the next 5 and 10 years. I want to draw a clear distinction here between some of the profitability over the next 5 and 10 years, the profitability of the next 5 and 10 years, and the themes and the stories that we're talking about today. Those are two different things.
I couldn't agree more, because and here's sort of what we talk about with our clients, and it looks like we've got John back, is, many people are going down the road and they're thinking that things are going to go back to normal, but that implies a look in the rearview mirror. And to your point, I don't think we're going to get where we're going if we're looking in the rearview mirror. You can't apply the same old tired assumptions and expect different results. I think you've really got to think differently, something your fund and your firm thinks very, very well about, because you're often a long way ahead of the market. Now, John has done the same thing. John's thinking constantly 1, 2, 3, 4, 5 steps beyond. John, how do you see the future playing out? Is it more of the same, or is it an entirely redefined future? And where are you going to begin looking for opportunity?
Well, before I begin with my comments about the future, I just want to point out one thing that the pandemic has done, we should all be aware of, and that is it's redefined the workplace. Video technology or online video technology has been a solution in search of a problem for a long time. And it was kind of out there, kind of on the fringe, but nobody really used it in any substantial way. And now Zoom, video conferencing, or like we are right now, and Zooming has become a part of our lives. And it's really reshaped the workplace. I think companies have discovered that they don't need as many people in their office. They don't need as many people commuting. And that has incredible ripple effects, whether it's real estate, traffic, car buying, et cetera.
Interestingly enough, we were just talking about that on Fox Business not 45 minutes ago, myself and Dave Asman. 4 out of 5 Manhattan office workers do not plan to be back in the office by September. There are huge repercussions for the tax base, the technology, the usage, the city, the form factor. Incredible change. Anyway, please continue.
Public transportation, et cetera. And I think so. One of my going along with that same idea, I think it's just as important to be able to predict the present as it is to think about the future, because can
you explain that? Predict the present. That's a very interesting choice of words.
Well, I feel like people don't give enough attention to what's actually happening right now. And if you can really understand what's happening right now, it gives you a firmer base to discover what's happening in the future. But investment opportunities arise when people misunderstand the present. So one of the things I think that people misunderstand today is the potential for electric vehicles and autonomous vehicles in the future. All of the entire automotive industry is moving toward electrification. Volkswagen pledged to move their entire to electric by 2020, for 4 years from now. Ford is going to spend $29 billion. General Motors is going to spend $27 billion separately on refitting all their factories to be electric vehicle efficient. And that transition is going to be a huge change for the entire supply chain of the auto business, ranging from the chips that go in the cars to the software that connects. And so what I'm really looking for is stocks like General Motors and Ford. I think just to think way out there, I think that the market may re-rate those two companies as technology companies in the future.
Interesting. I'm a self-acknowledged gearhead, and many of the viewers out there know that if there's a motor in it, sooner or later I'm on it, around it, flying it, racing it, running it, driving it, whatever. Gene, do you come down on electric vehicles the same way? Do you see that, or do you look deeper into the supply chain?
Right there with John. I think from our perspective is, what is the incremental piece that the market still is not pricing in? And I think that this concept of electrification is clearly the future. I think some of these recent IPOs and SPACs are evidence that whether it's a component supplier, that the market does recognize this opportunity. And I think that this is a case where really understanding that it's going to take some time to get there, but ultimately this is going to be bigger than what we think. Maybe to say it a slightly different way is the transition to EV will take longer than people think, but be more transformative than people could have ever imagined. And I think what that means is you're going to see some lumpiness in a lot of these different companies, and agree with John on the concept of some old companies can reinvent themselves. We think Ford is in that camp. And I see a massive opportunity, not just around purchasing vehicles. That's about a $2 trillion per year market. To put that into perspective, the smartphone market is about 1/4 the size of that. So this is a big opportunity for selling cars that are electric. But beyond that, as you said, the concept around autonomy is an important piece that adds a whole nother layer onto the value. And then there's a logistics piece that also can be automated through autonomy. And it's quite exciting. And I would just finish the thought with this simple exercise, which is that just look around your world today and think about all the things that you see on a daily basis that are autonomous. And I think most of you will answer very little. There's very little autonomy when you look outside, when you look at the grocery store, when you're out and about. And I think when you fast forward 10, 15 years from now, and you look outside and interact with the world around us, it is going to feel very different based on electrification and autonomy.
Do you guys worry like I do that the legal system isn't ready for this? I mean, I can't imagine a situation, for example, when an autonomous vehicle has to make the decision to sacrifice its passengers over the concern of pedestrians, or vice versa, or lawyers get into it when it comes to the vehicle did it as opposed to the driver. How do we break that down when it comes to investing? I mean, I see huge legal reserves having to be built up, and I'm not sure how that factors into the equation just yet.
I would look at it from a slightly different perspective. I think that autonomous vehicles are going to be so much safer than human-driven cars that insurance companies are going to force people into them.
Yep, I share that concern, actually. I'm going to be dragged kicking and screaming into the electric vehicle arena because it's probably safer.
I feel as if you're going to still be able to keep a non-electric car, keep your SUV for going out to skiing or to make a long trip. But for the most part, you're going to have to pay a huge insurance premium to drive your own car.
Interesting. Pay per mile seems to be gathering momentum, and in some ways I'm happy about that, but in some ways it implies Big Brother looking into our lives. And from a technology standpoint, I get that question a lot. I don't know about you guys, but investors are not only keen to look into the future, but they're also keenly aware that the future is looking at them. Gene, do you have any particular sense as to whether security or opportunity is the bigger play here?
Well, just on the cybersecurity side, just want to make sure I understand the question. I
all
think
facets of technology. I mean, we're going to have autonomous vehicles. We're going to have, tremendous digital interaction within our lives. One of the data points that, caught my attention somewhere a couple months ago, 75% of the world's population is going to interact with some form of big data every 18 seconds within the next year or two. And, that's only going to accelerate as we go forward.
So maybe just a thought on the cybersecurity piece is that I think that the evolution of that is going to move beyond firewalls and intrusion detection systems, some of this hardware and software that have become kind of mainstream over the past 30 years. And I think that the real forefront around this is going to be really identifying this may seem a little bit from left field here, but I think agents, people working for other companies or other governments, and trying to understand how these threats from within can create intellectual property theft and also create some of these breaches. And so I think that has always been the most difficult part to secure, is the human element to it. But we work with companies that are trying to do just that, make companies better aware of who they're hiring and have better sense of when an employee may be doing something that is malicious for its base. So don't know if that was kind of the answer to your question. Obviously, data is really important, and it is the underpinnings of everything that we're talking about today.
Fellas, how do we
just to add on to that? I would say that when we talk about the dangers of surveillance, the dangers of Big Brother, what we're really talking about is amassing incredible masses of information about each individual and situation, and then having the software able to sort through it and make sense of it. And that's why I think that the next second biggest trend, in addition to EVs, is artificial intelligence. Now, artificial intelligence kind of gets a bad rap. It's gotten a bad rap lately. A lot of people are impatient. They think it's taking too long for it to work. But AI as a concept has been around for a long time. But the ability to amass huge reservoirs of data, and then the computing power in which that allows us to sort through all of that stuff, that's new. And that's why AI is still a super important piece of everyone's puzzle going forward. There's a new technology, and there's a new AI called GPT-3. That's a new type of AI that negates the use for human interaction with the AI, and it means faster development. It's going to be used in the Tesla autopilot, and that's one of the reasons I really recommend people check out NVIDIA, which is a chip maker. Yep. It's a large chip maker. They've done really well, but it has a huge future.
That's been one of my favorite recommendations for a very, very long time, and
people
still love the company. JP, how about you?
John's on it. The AI piece, it's really important. We try to vector that into companies that have the potential to use AI to really transform their businesses. And so again, we'll take it as a given that AI is real, and we can maybe forego the formality of breaking down the structure, the scaffolding around AI, and talk about an industry, a company that can be benefited. This is a company that Loop is invested in. It is two of them. It's Zillow and Opendoor. And of course, Zillow has the Zestimate. And for those of you who, very few of you who probably have not been on Zillow in the past month, it's almost every adult in America is on Zillow at least once a month. And that Zestimate
is the number really that high, Gene? Excuse me for a second. Is the number that high now? That is staggering.
It is. Yeah, it's 200. In the December quarter, they had just over 201 million monthly active users. There's about 330 million people in the US. Then, people under the age of like 15 aren't going to be moving, and probably over the age of 90 aren't going to be moving as much. And so when you really break that down, it is just a powerful testimony of either people's interest in real estate.
Wow.
But the piece around AI, I want to zero in on that, on the Zestimate. And the Zestimate is really important because when you think about the concept of where Zillow and Opendoor can go, which is eventually being able to transact your home online. Yep. Before you buy a home, you'll still want to walk through the home. They'll still want to do that physically walk through the home. But selling your home, you really want to do that online. You don't want to deal with the hassle of showings and kind of doing some quick remodelings. But ultimately what matters is the price of your home. That's the real kicker here. And I would just say this, is that the Zestimate's been around for a decade. There are certain parts of the Zestimate called on-market Zestimate that are incredibly accurate, 99% accurate, better than a human today. But other parts are called off-market, which are not as accurate. And when we think about AI, to John's point, AI and what it could do, this is a wheelhouse opportunity for artificial intelligence. And if you're a professional real estate person, if you're a realtor, I think you may be rolling your eyes right now, thinking a machine will never be able to factor in that new kitchen update or the feeling of warm sun on a southern focused sunroom in the back. But in fact, that's the kind of stuff that AI can do. If I would fast forward this 5-10 years from now, I bet the Zestimate has a powerful, is powerfully accurate, is more revered than humans. And I think when it comes to estimating the value of a home, and I think that you're going to start to see this iBuying, people buying and selling their homes. Today, it's less than 1% of people in the US do that. I think you're going to see that number start to climb much, much higher.
Fascinating, fascinating, fascinating. So another question I've gotten a lot lately, particularly coming into this panel, fellas, is what do you tell investors who are concerned about moving beyond FANG? Beyond the traditional FANG stocks? How do you think about that? Is that even something they should do or shouldn't do, or bluntly, how do you move beyond FANG?
And part of what you're talking about is what's the next FANG? Like what's the next FANG, right? Because those stocks got to be famous not just because they're software and technology stocks, but because they represent really successful companies. So what are the really successful companies that are just waiting out there? What's NASDAQ 101? If you assume you have the biggest, best tech stocks in the NASDAQ 100. What's 101? What's 102? What's 105? What's 110? It's likely to become like number 50 or number 25 years to come. And I have a sneaking suspicion that it may be coming from TV. You know, we grew up, I don't know how old you guys are, but I grew up watching what's called linear TV. You had CBS, ABC, sometimes PBS, and occasionally a baseball game on the local channel. And that's called linear TV. We've all seen it. We've all probably still have it. And if it wasn't for live sports, we probably wouldn't have it at all. Why is that? Because people want to unbundle. People are disappointed with linear TV. They want their cable TV, but they don't want cable to be bundled anymore. They want it unbundled. So the latest trend that we're looking at in entertainment is unbundling all these, unbundling your TV from the cable box and having separate apps for the shows that you want to watch. Shows like companies like Viacom, CBS, Amazon Prime, HBO Go, Paramount Plus, Discovery Channel, etc. And so, in my view, there is a big opportunity in the entertainment piece, but there's an even bigger opportunity in the advertising, because obviously advertising was the foundation of linear TV. It's also going to be the foundation of nonlinear TV. And the company that I've been really focusing on for my investors, for my readers, is the Trade Desk, TTD. It's a company based down in Ventura, California, and it has essentially a near monopoly on the advertising on these nonlinear TV stations and TV apps. And another one that I want people to focus on is Magnite, MGNI, which does the same thing but on a smaller scale.
Gene, do you have something similar in mind?
I do, and maybe I just want to kind of expand on that FANG topic as well. Is FANG the future? And the answer is no, it's not. There will be a fracturing of FANG, and we think that the remaining leadership is going to come from Apple, Amazon, and Google.
Yep.
And at Facebook and Netflix, I see the opportunity around on demand with Netflix, but ultimately those two companies are they're not really going after massive untapped markets like the three other, Amazon, Apple, and Google are. And then I would just mention too, then begs the question is then what is the next FANG and where does that leadership come from? And we kind of have this group of other companies that can fill into that. I mentioned a couple that potentially could be there with Open Door and Zillow, but there is everything around, and we haven't done our full work on these either, but it could come from companies around future of work. It could come from future of commerce and cars. Think about like a company like Carvana. And there are these kind of the understudies. Another Loop investment is Unity Software. They're building kind of the virtual worlds around gaming and VR. If I can pause right there and just fill in a blank around VR and gaming. Roblox recently went public. For those of you who know anyone below the age of 13, there's a high probability that they have played Roblox in the last day. The average teenager plays about 2.5 hours per day. It is not a world that I aspire myself or my kids to participate in, but unfortunately I'm old and I am not the future. And if you are of those age demographics and of the future, you're going to want these types of experiences, this immersive, put goggles on and just kind of go into what we call the third place. So that's Unity Software. They have tools that help build those immersive environments. And so when we think about the future of tech leadership, it will be a combination of FANG, some of the remaining FANG, and some of this group of understudies that are just starting to tap into these massive growth curves.
Interesting. See, my take on FANG is that I agree. I think it's going to get broken up. It's going to be very different than the FANG that we knew. But I also think about stocks like Apple, which are making fundamental pivots in terms of their business model. They're moving beyond the iPhone. The iPhone is not going to become the product anymore. It's going to be the platform. It's going to be the ecosphere. Right. Terms that we talked about a decade ago are finally coming into vogue. People are beginning to understand it. People still think, Tesla is one of my favorite investments, for example. They still think of it as a car company. It's not a car company. It's a distributed electrical power production. He just happens to make cars and flamethrowers and tequila and all kinds of other things. So to me, it's a very exciting, compelling stock for that reason. But I think that personal identity in the midst of all this. I have almost the opposite view, it sounds like, to the two of you. I think personal identity is going to become the most jealously guarded element of our digital future, and that many of these applications that we presently think of today, which are advertising driven or choice driven, are in fact going to become privacy driven. So the unbundling is going to be a function of what do I want to watch, but what do I not want to watch, as opposed to let me pick and choose, which is kind of the menu program that's out there now. So I'm in with, for example, the Disney Hulu crowd, because there you've got an alternative asset class, but you've got all this other infrastructure coming on board. You've got Amazon, Apple TV coming on board. To me, it's who's got the big enough capital structure to bring all these other things to bear, rather than the smaller technologies, which are going to get either enveloped or purchased. I think Netflix, for example, is a tremendously risky proposition at this point. What about you guys?
Agree with that on that Netflix. I just say one thing on Disney too, is that I don't think that this company should have an over-the-top high multiple.
Me neither.
But I will say this: they've got an incredible content, the world's best content library of characters, and there's nothing like it. I mean, it's everything from obviously Mickey Mouse to the Avengers and everything in between. It's quite incredible, and these iconic names, this iconic content, is something that is timeless. I remember when I started in the industry, this is back in the 90s, the first project that I worked on was this, it was about the size of a telephone book. It was a thick research report called The Content Continuum, and it was titled as Content is King. And never more true today, the power of content, and I think Disney's going to do just great.
Absolutely. Well, we're coming up on our time limit, so let me do this for our audience. I'd like you guys to recap sort of your top 3 stocks with the names and tickers, and everybody out there can write these things down. So Gene, lead in.
So I think there's 2 kind of forces at play here. One is kind of again, this is my opinion, kind of the safer tech, if you will. I think it's Apple. I think that's going to be the top performing FANG in 2021, part of this accelerating digital transformation. And I think outside of Apple, I would just focus on those 2. We talked about the iBuying opportunity around Zillow and Opendoor. These are companies that you take an approach of kind of holding for the next 5 to 10 years. And would add also, I agree with you, Keith, on the Tesla opportunity too. But I would think about those 4, and especially the back 3, Opendoor, Zillow, and Tesla, as long-term. Almost purchase these and don't even look at them. Maybe check them out every 3 months.
Yep. I'm with you on that. Volatility is here to stay, and you got to just be prepared for that mentally. John, a couple top stocks that you would look at, 3 of them, please. Well, John, we've lost your mic.
Thanks.
There we go.
Is that better?
Yep.
Hey, sorry, I lost you there. My audio, my video went down. Can I tell your audience first, though, that they can get my slides or my notes if they text 206-279-1385?
Well, you can tell the audience that because you just did.
And put in and add the word trends. So text the word trends to 206-279-1385.
Fantastic.
And as far as
Gene, how do we get to your research?
I appreciate that. You go to Loop Ventures. It's LOU as in uniform, P, Loop Ventures. Check it out. Check out our ETF too. The ticker is LOUP.
Fantastic. And for me, it's just simply 1 bar ahead, as in you'll be 1 bar ahead of everybody else if you're there. So onebarahead.com if you want to come visit me and check out my research. But how are we doing here? We got 2 or 3 minutes for questions.
We've actually got you until 6 p.m. Eastern time. So you still have about 12 minutes.
Well, I would love to turn this to the audience and have some questions if they're out there.
Absolutely. Viewer right here just wrote in, do you gentlemen think that the development of quantum computing, where it can function at near room temperature, will help with any cybersecurity issues?
Oh, that's an interesting question. I'm going to toss that one to you, Gene.
I'm going to toss that one over to John. I think you have 2/3 of the panel stumped, audience here. Over to John. I don't have a good answer to that.
I don't have a good answer other than to say quantum is out there, it's coming, but we don't know what the time frame is.
Yeah, and and we did talk very critically for all the different industry segments early on in our discussion tonight about the jump in computing power. And that's actually significant because many of the technologies that we're using right now, we literally didn't have the computing power to deal with until relatively recent. So I would firmly expect that quantum computing, based on what I know, is going to be a major breakthrough. But with regard to the specificity, I haven't got a clue. Next question.
All right. Another viewer was writing in. They're wondering, what companies do you know that develop GPT-3 technology?
John?
Well, it's not that it's a protocol. It's an open protocol, so I mean anybody can use it. But if you really want to see a company that appears to be taking advantage of it right away, it's Tesla with its autopilot technology.
Gene, do you have a comparable one? Tesla would be the one I would pick.
Agree on Tesla.
Okay.
That's your best bet. Lucid
Fantastic.
is another way to play that too, potentially. Lucid Motors.
Next question.
All right. We had multiple viewers. They were just wondering if you don't mind just running through the tickers of each of your 3 picks again.
All right.
I'll start from mine. Apple probably needs no introduction for a ticker. Zillow, it's Z as in Zulu, as in Zillow, and Open Door, OPEN. That's my opinion. Fantastic.
John?
And the stocks that I've mentioned in the automotive space, electric automotive space, Ford, F, General Motors, GM, Magna International, which is a big parts supplier based in Canada, MGA, Microsoft for its connectivity software for the new generation of cars, and NXP Semiconductor, NXPI is my chip choice for the electric vehicle space. And as far as artificial intelligence goes, we're looking at Tesla, TSLA, Alphabet, GOOGL, because of its cloud computing potential, NVIDIA, because of its software, not just its hardware, it's NVDA, and Cadence, CDNS, which is a platform for making semiconductors.
Fantastic.
And I have one more.
John, that's a big 3 that you've counted there.
Oh, I see. You wanted 3.
That's okay. That's about 9, but go for it.
I work in multiples of 3.
Absolutely.
And then in the TV space, we have the Trade Desk, TTD, Magnite, MGNI, and I'll throw Disney in there just because I think it's a fascinating story of a company that used to be known for its hospitality and managed to pivot extremely quickly into the digital entertainment space and got a higher rating than it did when it was higher PE rating than it did when it was a hospitality company.
Yeah, that was always something that fascinated me about Disney. So my choices are Apple, because I think of the medical pivot. The data that we're beginning to see there is the real key. And anybody thinking about Apple in terms of iPhones is already behind the mark. Tesla is clear to me because of power generation, the distributed nature of computing, that's really what that one's about. It's about the data and the power, not the vehicles, not the flamethrowers, not the trips to Mars, not anything else that Musk comes up with, but I do arguably think he is this generation's Steve Jobs. And then finally, I think NVIDIA, because I'm a picks and shovels guy. I want to be at the heart of whatever's going on. To me, that is the most logical chipset manufacturer. A lot of people ask me about Intel, which in my day was the company to own. But I think, in a lot of ways, that company has faded onto the back burner. And I think it's very unlikely that it regains the investment oomph that it used to have. I'm optimistic that Gelsinger at the helm will do it, but I don't think that's likely as opposed to possible. Next question.
The fascinating thing that's happening in semiconductors is
What's
this
that?
move. The fascinating thing that's it's happening in semiconductors is this move from off-the-shelf x86 Intel architecture to the low-powered ARM architecture.
Yep.
And I think we're going to see a huge boom in sort of bespoke or custom-made chips, as we've already seen Apple. And for Taiwan Semiconductor Manufacturing, TSM, which will make these bespoke chips on behalf of individual companies.
Be very interesting to see how this goes. Do we have any other questions out there?
Yeah, we have a viewer who writes in, they're wondering how does the inflation threat impact the outlook for investing in new high growth firms?
Well, I'd
I'd
like
love to take that one.
I was just say I'll fight you for that one, Gene. But go ahead.
It's a problem. And likely we spent a lot of time, we've talked to economists, talked to a large bank today. They're economists. And bottom line is that there's this showdown between the Fed and the bond market. Let's forget about that showdown. The reality is rates are going to likely going to continue to inch up. And the pace of the rate increases, if they go up modestly, kind of in a controlled way, despite everything that the Fed's saying, they still probably do go up. And that's something that at least is okay. It's manageable for high tech. But that's why I mentioned, you own these transformative companies and you forget about them, because it is going to be a wild ride. And if rates do inch higher, you're going to see we're not out of the volatility phase yet. And the bond markets are still trying to find its legs.
Well, it's interesting because we actually had an exclusive interview with Dr. Mark Mobius in One Bar Ahead last month, where we talked about exactly this issue. And Dr. Mobius, has spent 40 plus years figuring this stuff out, but he says rethink inflation along the lines specifically of technology, because technology is one of the very few industries where you can have constant improvement at a rate that exceeds the inflationary concern. And you got margin protection. So to me, that's absolutely critical going forward. I'm not particularly concerned about inflation per se, or even rising rates. It's the speed of the rise, because that's where all the hedge funds are levered up to their eyeballs. They're going to have to sell. That's what's going to induce the volatility. But that's going to be transitory, to borrow Powell's word. That's not going to stick around. And if you've got the right investments, you use those dips as buying opportunities. Longer term, 3, 5, 10 years, my belief is technology is going to be one of the single strongest areas in your portfolio for many years to come.
Agree.
John, any pushback or agreement, disagreement?
I agree with you completely. I think people don't really understand in so many ways the relationship between inflation and the stock market. The easiest way to think about it is that low inflation helps support higher PEs. So when inflation arises, PEs must go down, and PEs are the secret lever behind stock prices. They're hidden by earnings growth, but the PE is very, very important. And as inflation rises, PEs are eroded. So as investors, we really have to hope that inflation does not raise its ugly head. And in my personal opinion, I don't think it will.
Yeah, I think that it's interesting because that we have a discussion tomorrow morning, mornings with Maria, that I'll be on, and we're talking precisely about this issue: is how is this going to handle what Chairman Powell could do? And I don't know that he's in a winning situation no matter what he says. But anyway, that's getting sidetracked away from our technology ideas. Next question, please.
All right, thank you. We did have actually numerous people asking about Palantir.
Oh, that's one of my favorites.
And they just wanted to know if you see good things with that happening with that company.
I think it's a $50 stock inside of 12 months, maybe 24 tops, totally underestimated by the market, which does not understand it. Most Wall Street analysts continue to miscategorize the company. They do not understand big data. They don't understand the engine. They don't understand what's going on with it. Gene, do you see it differently?
I'm right there with you. I think there is Palantir. There's another host of other companies you're going to see coming public that are following that same theme of just underappreciated data companies.
I totally agree.
Cool. Yeah, I that's one of those stocks that I personally own a fair chunk of, and intend to hold probably till the end of time, or unless the market tells me otherwise.
Can you tell me when the end of time comes, by the way?
Well, Gene's inventing a time machine, I heard.
Yeah, stay tuned. Next episode.
Next question.
All right, back to Zillow here. They're wondering, how will the rate rise affect Zillow? Does it still own a lot of inventory they bought a few years ago, or have they sold it off?
Good question.
Rates do have an impact on their iBuying. Interest as an overall part of their expenses is 0.5%, so it's extremely small. And they typically will own a home for 6 weeks. So if you think about throughout a year, it really is about 3 or 4 months. So We've gone and done the math. If you assume that rates go up by a full percent over the next year, it will cost Zillow about $15 million in incremental costs. And they've got about $4 billion on the balance sheet. So thematically, it does spook investors because they wonder about sensitivity to the iBuying model relative to interest rates. But from a substance standpoint, it doesn't impact the model.
It sounds like it's a rounding error.
Rounding error.
Yeah. Yeah. Good question. Next one.
All right, let's see what we have coming in here. All right, we had some people that were asking about blockchain data and the sharing like block ETF. Any thoughts?
Boy, I am probably not the one for that. I think digital stuff is definitely important. Blockchain is critical. Development still got a long way to go. I don't think it's what it's cracked up to be, but that doesn't mean it's a bad thing. Gene, John?
I don't see block. Go ahead, Gene.
No, go ahead, John.
I just don't see. I think blockchain is an important technology, but I don't see it as an investment theme.
Yep. Gene?
I think it's real. We have one of our other partners is doing is the Loop expert on blockchain. So I defer to Doug Clinton, who unfortunately is not here.
You know, that raises an interesting question, right? And one of the things that I get from our clients a lot is, well, just because of X, Y, Z, isn't that a good investment? And, you know, the answer is no. Just because something is fungible, usable, immediately attractive doesn't necessarily mean the investment case for owning it is great. And Netflix is a primary example of that one. Right now, it's had a great run. It's been phenomenally successful. But given the way the market's changing, the technology we talked about today, the risks are probably higher than ever that you continue to own that stock. I personally think it's not outrageous to believe that Netflix is going to get gobbled up by a bigger player at some point or struggle mightily in denial as those content rules change. Next question.
All right, looks like we have time for just about one more question here.
Yeah, let's do one more.
So this might be a group question for you to close out on there. A few people were wondering, what are the really underappreciated data companies?
Ooh. I think Tesla's underappreciated. I think Apple's underappreciated, both of which are data companies.
Palantir.
Palantir is completely underestimated and appreciated. Gene, John, any names I missed?
No, I agree in the Palantir piece and Tesla. Nothing that you missed on my perspective. I think I would say Zillow is a data company around the Zestimate and what they're doing there.
I would agree with that. Yep.
Comes back to data is a powerful flywheel. That's one of the reasons why FANG happened, was because of data.
Yep.
And you have to look at who is gathering data. That's companies. Who are the new players? Maybe we talk about some of the existing ones. Tesla's a good example. Palantir, Zillow. Those are kind of the next wave of companies that are going to create these moats around data.
And I would also add to that. I hate to do this, but some of the old guard companies, Microsoft, Google, and Amazon, they all depend for their earnings estimates to be successful with their cloud operations, and they're continuing to do so. And I don't think there will be a big competitor to those operations because of the cost of getting to the point where they already are.
Yeah, scale is something.
Don't count out Google.
Yeah, agreed. And don't count out Microsoft either. So we are right up against our threshold, everybody in the audience. I hope you have enjoyed today's discussion as much as I have. I have learned a lot from our two experts. I have learned a lot from your questions. They were all excellent. So the key going forward is not just, if we can recap, not just thinking about today in terms of where we are, but why and how we are where we are is going to dictate in large path where we go from here. It's the unexpected changes, the new developments that are going to be key to your portfolio. We've talked about a lot of great companies today. Do your diligence. I think you're going to be impressed. And by all means, please go take a look at Gene and John's research. And if you're interested, take a look at mine. With that, I'm Keith Fitzgerald. Thanks to the Money Show. Thanks to all of you in the audience. I wish you a super good night.
Thanks, Keith.
Thanks, guys. Good night, everyone.
Have a great evening, gentlemen.
Cheers.
Take care.
All right, everyone. Thank you so much for attending today's Money Show Virtual Expo. We were just speaking with Keith Fitzgerald, John Markman, and Gene Munster, some of the powerhouse greats there. So again, thank you so much for attending. Stick around for more great content coming up tomorrow and starting at 10 a.m. We will also have more content coming to you on Thursday as well. Be sure to check out any of the virtual booths in the virtual platform where you can download any materials, add those to your briefcase, carry those around with you through the entire presentations, and you can access those after the event is over as well. So again, thank you for attending. Good night, everyone. We'll see you tomorrow.